So yeah, I hope everyone's off to the new year's off to a great start. Happy New Year. If I haven't had a chance to talk with you or see you in person. I'm pretty excited about 2025 myself. Spent a lot of time last year actually developing this masterclass series that you all are participating in today. Today's an intro conversation. But I have put together an entire masterclass series that I'll be rolling out more throughout 2025, just trying to help people learn more about real estate investing and essentially how they can start creating financial freedom for themselves. So I know everyone, or at least most people I talk to, oftentimes have a very deep desire to be financially free. And may not always understand the strategies and the tactics and methods to be able to get there. And so I want to be someone that's a resource and able to help you reach those goals. And I firmly believe and fundamentally believe that real estate is one of the greatest ways to create financial freedom for yourself. It's just an incredible asset class with a lot of great returns. But before I talk a lot about myself, because I know most of you may know me, some of you may not, I want to start off, and like I stated earlier, for those of you that feel comfortable coming on camera, would love for you to do so. For those of you that don't feel comfortable coming on camera, but are at least willing to speak, I do want to make this a bit interactive because I think that's the greatest way for people to learn. So, one question I just want to start out with for the group is, why are you here? What attracted you to this conversation today? It's Friday. January 3rd. It's the lunch hour. There are a million other things you could be doing with your Friday afternoon instead of spending an hour and a half with me. So just share with me, anyone that's willing to share. Why are you here today? Yeah, and just go off mute and you can start talking. I think Cheryl, I saw you raise your hand, but go right ahead. You ready, Cheryl? Or
I
uh,
think I've got myself unmuted now.
there you went off camera, but you're unmuted. So yeah, share with us why are you here today, Cheryl?
Well, I'm here because we're looking to expand our current brick and mortar locations. And we're actually in the midst of looking at a commercial property to buy and then rent it to my business.
Okay, so
So
you're here,
I'm trying to
and
learn more about tax advantages to doing it that way too.
And Cheryl, we're not gonna. I know you're world famous for your desserts, your treats, but we're not gonna assume everybody knows who you are. So introduce yourself, please.
So I'm Cheryl Albrecht. I'm the owner of To the Moon and Back Frozen Treats. We have national award-winning ice creams, and we're based out of Oak Ridge. And last April, we opened a second location in South Winston-Salem in a little town called Midway.
Congratulations. And I hate to admit I haven't made it there yet, but I will get there. But I think you were sharing, Cheryl, that you're here with us today because you're motivated to be here because you have something you want to do with your business.
Yeah.
And learning about real estate will obviously help you to be able to achieve whatever that goal is. I think that's a great reason to join us today. A few other people, are you willing to share with us today? Why are you on this webinar? Why are you here today?
I'll speak.
Hey, Tiffany, how are you?
Hey, Algenon, I'm good. How are you?
I'm doing well. Doing well. Great to see you in 2025.
You too. Yeah, I just saw your post for this come across my news feed last night on Facebook, and gaining financial freedom is something that's very front and center in my mind. It's something I try to learn about every single day, and I'm really working towards gaining financial freedom. So this is something I've been interested in and I have really no idea about. So I wanted to hang out with you today.
Well, I appreciate that. Let me ask a follow-up question. Why do you want to gain financial freedom? What's motivating you?
Well, I've sort of fallen, I don't really feel like I'm where I should be at this stage of my life. And I do have a large family. I have 5 children. So I have a lot of people depending on me. And as I grow into my like mid to late 40s now, I realize just how quickly retirement is coming. And I'd like to be in a good place when I get there. So,
That's a very big driving factor. I'm sure a lot of people in the webinar today might be here for that same reason, Tiffany. Thank you for sharing that. Can I get a couple more to share, or anybody else willing to share with me? Just why are you here with us today?
Hey, Algenon, how you doing?
Hey, man, how are you doing?
Pretty good. And hello to everyone on the call. My name is Trajan Baker. Recently graduated from Hampton University with my master's in architecture. And as I'm learning more about the world of architecture and community development, real estate naturally comes into play. The traditional role of the architect is to typically work with the client who then brings them work, but I'm very interested in the entrepreneurial mindset of acquiring my own projects and building my own things that are very much passion driven. In addition to architecture, I have a love for art and music, so I'd love to develop projects architecturally that tie back to those other passions. So right now, I'm just very much in the networking and research phase and excited to be here. So thank you, Ajana.
Excited to have you, man. Sharp guy. Keep an eye on him. He's going to be doing some great things in the future. One or two more. Just why are you on this webinar? What drove you to be here with us today? What motivated you?
Algenon, how are you?
Hey, man, how you doing?
Pretty good. Long time.
A long, long time.
Yeah, yeah. I'm Rashad Woods. My wife and I, we own a home care agency, and we are at some point looking to expand those, and looking to have multiple locations, along with offering options of in the future maybe some VA servicing and things like that, housing, things of that nature for them, and looking for contracts, maybe government contracts and things like that. And also just as a for a personal aspect of it, just want to be as a young lady said before, like just be have financial freedom, and being able to have opportunity to be able to have multiple um, real estate locations and things of that nature, houses, homes, whether it be just home or just brick and mortar, things of that nature. So you were just looking to kind of get some information, figure out what's the correct route, what's the best options, and just figuring out how to maneuver in this real estate world. That's it.
I appreciate you sharing that, man. Congratulations on the success you and your wife have had up to this point. It's exciting.
Yeah, man. I appreciate it. Thank you very much, Ajahn.
All right, let me get one more in there. Just one more from someone. Why are you here with us this Friday? Go right ahead, Kenneth. I think I see your finger popping up there.
Absolutely. Good morning to everyone. Happy New Year to everyone. Now, Janon, I tell you, I've decided to join this call because of you. I respected your leadership in the community that the Greensboro market, and so I've also respected your knowledge. So this is a reset for me in 2025 to listen and learn from the master. Been fortunate enough to be an entrepreneur on this side of the world in life sciences, but I've also dipped my toe in the real estate market. I currently own with my siblings 7 homes, but they're limited to a geographic space that we're comfortable with our home area of Edgecombe County. And now I'm part of a real estate development team that we're going to be building hotels and we're doing some affordable housing across the country. So I'm hoping I can pick up some jewels from you, some nuggets, and maybe expand that knowledge base as I continue to go along my growth pattern of diversifying my income. I'm in retirement now, so no longer tied to the 9 to 5. You and I talked about this time last year, so this is an extension of that conversation, and I'm gonna hitch my pony to the expert in this space. So, thanks for setting this up.
Well, I'm proud. I'm happy to set it up. Thank you for being here, Kenneth. And
Yeah.
you're in retirement, so I might need to be learning from you. You've already ran the race. I'm still out here running, trying to
It
get
was
to
in
the
a,
line.
it was in a different area of life sciences. I was fortunate enough to be in that space for over 20 some odd years, and but I still got a lot of fuel in the tank.
Well, congratulations. And I was just jotting down some notes as some of y'all were sharing the reasons why you decided to join us today. And I mean, it's a variety of reasons, right? Like I hear some people say they're here because they want to learn about expanding their business. I heard Tiffany talk about her children and her family. A lot of times when I hear people talk about wanting financial freedom, they oftentimes talk about their kids and the reason why they're doing what they're doing today to try to make life a little bit better for their family. I heard Trajan talk about the desire to learn more about real estate development. I heard some folks talk about, just having, wanting to understand the options and being able to plan better. And then I heard Kenneth talk a little bit about knowledge and just being able to learn from someone that's already done some of this. And if you know me at all, I do believe that knowledge is empowerment. I really feel like one of my purposes in life is to try to change the world by expanding through knowledge, by expanding people through knowledge. And that's a lot of the reason, a lot of the motivation for why I decided to structure and put together this master class. I've been practicing commercial real estate for 21 years. I cannot believe that I've been doing it for that long. I would tell you the first 3 to 5 years that I was in the business, I didn't think I would ever make it. Commercial real estate is a very challenging business. There's a reason why a lot of people are not real estate investors or developers or operators. I mean, there's a reason why that group of people is a small group of people, is because it's very challenging to do. You really, really have to find a lot of inner strength, a lot of inner wisdom, and a lot of inner motivation to be successful in this business. And so I'm so grateful that I've been able to practice real estate for 21 years. This past year, in addition to creating this masterclass series that we're talking about today, I also launched my first investment fund. So I've been structuring and financing commercial real estate for 21 years. And so now I'm actually moving into another phase of my career, which is actually raising money and helping people to, get access to these types of opportunities and investment deals. So that's something that was very exciting for me last year. I also partnered with a private equity fund last year so that I could go out and start doing larger transactions. And so, in partnership with my partners at Bloomfield Capital, we were able to do probably around $100 million in real estate placements last year. We did that across 4 different deals. Two of them were large apartment complexes, one in South Carolina, one in Virginia. And then we also just announced, I think right before Christmas, we announced the closing of a Lowe's shopping center in Hickory, North Carolina. And then we also did a self-storage property over in Fayetteville, North Carolina. And so all those deals combined came up to about $100 million. This year, my goal is to try to double that. I would love to do somewhere between 6 and 8 transactions as we progress throughout this year, if it's the Lord's will. So I have, to Kenneth's point, I'm careful to call myself a master, but I will say I'm an expert. I've been doing this for a very long time. I've seen a lot of different types of transactions. I have raised money a number of different ways. And so I've just been able to really understand and be exposed to a lot within this business. And one of the things that I want to share with you, well, we're going to talk about a few things before you get off the webinar today. But one of the things I wanted to talk about is really why some people are not successful in this business. What is it that I see oftentimes that make it so challenging for people to really get traction in the real estate business? Well, one thing you guys have already done already, we went around the circle, we talked, you all shared why you're here. So you shared what your desire is. I think anytime you want to go off and do something important or big, you have to have a very clear understanding of what your desire is. You have to understand the why behind the what. And too often I see people say to me, well, man, I want to buy a piece of real estate, or I want to invest in real estate, or I want to develop real estate, or I want real estate, or I want to buy a piece of property for my business. But they don't always tell me the actual desire. What is it that's really pushing you? And the reason why that's important is because that inner motivation is what's going to allow you to keep going and to chase deals and find opportunities even when you may not necessarily feel like it. So desire is really, really important. The next big thing, and hopefully you're writing some of this down, the next big thing is actual will. I see oftentimes people tell me what they desire, they tell me what they're motivated about, but they don't find the actual will to do anything about it. So what do I mean by will? There's roughly, let me see, there's roughly 20 people on this webinar today. but we had probably about 85 people sign up on Facebook. So, I mean, this is a question for the group. How often have you wanted to do something and you just, for whatever reason, you don't find the will to actually do it? You know, Cheryl, I'll ask this question for you.
Yeah.
You own a business.
Yes.
Where do you find that will at every single day to go in and run that business? I know everything's not always smooth. You've got challenges. I'm certain there's days you wake up in the morning and you're like, I don't really want to go into the shop, but you have to find that internal willpower. How do you find that? Where do you find that at?
I don't really have a good answer for that question. Just internal drive. I just want to do better.
You just want
Always,
to, but you
always
have
looking
a
to
reason.
improve. Yeah, yeah, because I like providing for my family and keeping a roof over my head. I like living inside with heat and water and all that good stuff. Have grocery money, and I like being able to make my bill payments made on time.
And so that drives that willpower for you. And
Yeah,
that's
yeah.
very important. So for everyone that's on this webinar, no matter the reason or the desire why you're here, whether it's because you want to expand your business or you want to be able to get into a position to take better care of your kids, or you just want financial freedom for yourself, or you just want the knowledge, understand that you do have to combine that desire with that will to be able to pursue that goal. And if you'll do those two things, and this is the third one, this is really, really significant. I'm going to spend a little bit of time on this one. If you truly want to be successful in real estate, you have to develop the right mindset. And so often I talk to people who they have a consumer mindset, but they tell me they want to be an investor. I'm going to say that again. So often I talk to people, they have a consumer mindset. Okay. They approach everything as a consumer. They're always focused on consumption, but then they tell me they want to be an investor. I mean, if you want to be an investor, if you want to be a business owner, you have to have the mindset of the investor, and that's where that will and that desire combines to be able to create that kind of a mindset. Dr. Tyson, I see you up there in the corner. When I talk about a consumer mindset, what do you think I mean by a consumer mindset?
I would assume that you're referring to purchasing things as opposed to investing in things. I can't think of a good example, but like if I'm going to the store to buy something that I necessarily don't need just because I want it, would be a consumer, as opposed to saving those monies and investing it in stocks or something like that so that it can start making money for me.
That's right. You're focused on spending money instead of utilizing your money to make more money. And I will tell you that the majority of people in this country have a consumer mindset. They are always focused on consumption, whether it's the latest, greatest clothes, taking trips all the time, buying what, you've got tons of people that have all these subscriptions nowadays, but they don't necessarily watch everything. We are really focused on consumption in today's time. And that really prevents people from developing the right mindset to be an investor. Kenneth, I'll throw this question at you since you're on camera. I'll hear people come to me and say, hey, I want to buy a piece of real estate. I want to buy my first house. I want to do my first flip, or I want to buy a piece of land. But if you want to do that, Kenneth, don't you have to sort of give up some stuff to be able to do what you want to do sometimes?
You do. You're absolutely right. And I think the term that I used, learned a long time ago, is opportunity cost. You got to give up something to get something. And so that first property that I bought, I sold a home, right time, right place. And instead of just pocketing that extra capital, I reinvested that capital into my first real estate purchase. And that was over 20 some odd years ago. Could have spent it on a car, could have spent it on a vacation, but I saw that opportunity to invest in the property. I knew nothing about real estate. I knew nothing about the market of real estate. but I knew that area because I grew up there. And my vision was if I can get my first piece of property, could I place it as a part of my legacy, have something in the family that when the kids get older and they're now graduated, that if they want to stay there, they could. I still have family members living in that house.
Well, and I'm going to stop you right there because you
Sure.
just hit on something really important. You were able to take on that spirit and that mindset
Yeah.
because you had a desire that was much more important to you than something of immediate gratification.
Mm-hmm.
You then put the willpower behind that and you made the right decision, right? Like, or I'm not going to say you made the right decision. I'm going to say you made the best decision for yourself because I don't want people to think that I think you got to live like a pauper. If you want to travel, if you want to wear the latest, greatest clothes, if you want the latest, greatest vehicle, I'm all supportive of that. I'm not telling anyone that they shouldn't live that way. I think when you are making the right decisions and living the right way, you should have those things. However, I am telling the people on this webinar that if you are someone that has expressed some interest in becoming an investor, buying real estate, or developing real estate, but you haven't made the decision to actually give anything up yet, then you'll just always have that desire. At some point, you may actually have to give something up. You may have to go without something in order for you to realize whatever your dream is. And the thing that I often hear from people when they first get started in real estate investing is they always ask me, how do you come up with the money? Like, how do you get started? Like, where does that initial investment come from? And it comes from you. Like it comes from the decisions that you're making. There may be certain things that you have to say, well, I'm not going to get this, or I'm going to put this off so that I can save a little bit of money so that I can actually get started with my plan for financial freedom. You have to really figure out if that plan and that desire is greater than whatever it is that's staring you in the face at that particular moment. A lot of times, I'll be honest with you, most people don't have the ability to do it. Most people do not have the ability to take on the right mindset that's going to allow them to realize their goals. Now, you'll often, if you're around me enough, you'll often hear me talk about the difference between being an investor and being a saver. Okay. A lot of people that brag about their stock market accounts and all the stocks that they have and those kind of things, those people aren't necessarily always great investors. They may be great savers, and there's a difference between the two. Um, if you know how to live within your means, that will make you a great saver. I mean, if you put that money in an IRA, if you put it in a Roth IRA, if you put it in a stock account, it's going to earn returns. You're going to be a great saver. That doesn't necessarily mean you're a great investor. To be well, let me stop there. I'll ask that question. Rashad, I seen you come on camera. What do you think makes the difference between an actual investor and an actual saver? And anyone can chime in on this. If you just come on camera, I'll see you.
Hey, Algenon, this is Charm, I'm not in the best spot to be able to come on camera, so I apologize. But
Yeah.
as a financial advisor, I advise people to make or beat the inflation rate. So if you're a saver and you're saving just in a money market account or cash, you're not even keeping up with inflation because your rate of return isn't such that you can do that. And then once you pay tax on your money, you're really at a negative return. So an investor to me is someone that's trying to make a certain return that they can beat inflation and also have a little bit more, to kind of have an upside to their investment, to their capital investment.
Sherman, that's a really great response. And I'm going to come back to that because you said a couple good things I want to chime in on. But anyone else want to take a quick stab at that? What's the difference between an investor and someone that's just a great saver?
I would say that when you're looking to be an investor, you're looking to allow the money that you're making to keep moving. Saving allows you to have it in a certain place to stay there for a while, not doing anything, not allowing you to allowing any contributions being added to it. It's not revolving or anything like that. It's just sitting there. Me and my wife talk about saving all the time versus investing. And we always talk about, she's like, well, we want to have X amount of dollars in our saving, which is fine. You know, you want to be able to have money set aside, or, you know, have the option to this amount of money if we ever come into a situation where we can't pay all our bills, things of that nature. So we can take care of ourselves for 6 months to a year, however long that we need to for those savings. But the investment just allows that money to keep moving, keep drawing in more money, and sort of, we know what the previous young lady just said, you know, just to make sure that, you know, your money isn't just at a sit still for the most part.
John, that was a great answer too. Both of y'all really, you know, shared great responses. Before I dig in, does anybody else want to chime in on that at all? Or okay, seeing no one. You know, I thought Charmin did a really great job of highlighting what I like to talk about is if you're a saver, oftentimes you may not be taking a lot of risk. Right? I mean, so if you've got that money in a money market account, or you know, you invested that money with Charmin and she opened an IRA for you or some type of a stock account, you may be taking very minimal risk. And obviously, when you take minimal risk, you get minimal returns. I mean, it's sort of what we call a risk return scenario. That's why when you put your money in the bank, you put it in a savings account, it barely makes any money, but that money is pretty much guaranteed. If anything ever happened to that bank, they have insurance, they'll give you your money back. It's just a really low risk way of you saving money. If you're an investor, you're going to be a bit more comfortable taking risk. If you want to get out and develop commercial real estate, if you want to flip houses, if you want to own apartments, those things are risky endeavors. You're going to have to go out and get large mortgages. You may have to put large sums of money into these properties. And then there's all types of risk associated with constructing these properties or remodeling these properties or managing these properties. So it does have a certain type of risk profile when you get into real estate investing. However, instead of you making 1% on your money, you're probably going to make about 25% on your money. That's about the average return on a real estate deal, somewhere between 20 and 25%. So much, much larger returns, but obviously some more risk that you have to be comfortable taking on. The other thing, I want to come back to what Rashad just said, because he hit on a really, really important one. He talked about when you're an investor, you're essentially allowing your money to grow for you. And that is so important, and certainly important for you, Tiffany, and anyone else that's wanting to develop financial freedom so that they can take care of their kids or the next generation. When you're a saver, you're actually out working for the money. I mean, you're putting the money in the savings account or the money market account or the stock account or the IRA that Charmin created for you. I mean, you're actually having to go out and trade what we call trade time for money, right? That's what you do. You go out and you trade 8 hours or 10 hours of your day. Somebody gives you a certain amount of money, and then you spend some of that money, and then you save some of that money. What you want to be able to do is to get into a place where you're making money, where your money is making money. And that's a really important thing. If you want financial freedom, you will have to get to a place where you are generating passive income. I'm going to say that again, passive income. That is when your money, that dollar that you put out in the market, is actually earning another dollar, and those $2 are earning two more dollars, and those $4 are earning four more. I mean, it's a certain exponential return that you can start to expect. Um, you when you have passive income, that means if something happens to you, you got sick, you broke your leg, you don't feel well today, whatever's going on, that means your money doesn't necessarily stop coming in. And that's one of the greatest powers of real estate investing. I mean, is that it's passive income. All right, I'm going to ask you guys a question. I always like to ask this question and to see what kind of reaction I get. I'm going to just have a few of you sort of respond to this. Cheryl, since I see you on camera and you're not muted, when you buy a house, is that a investment? Like your residence. Like a lot of times people say, "Hey, this is an
Yeah, I think so, yes.
Okay. Anyone else? Now, I know I've got some smart people on this webinar. Um, so anyone else, when you buy your house or you bought your house, do you consider that to be an investment? I see Kathy in the chat. She says no. So Cheryl says yes. Kathy says no. Let's get a couple more people to chime in.
I say yes.
All right. All right. So Steven says no. So we got two no's and two yeses.
I,
And
I say
anyone
no.
else? You say no?
This is
Okay. Tiffany
this is
says no.
Teresa. No, yeah.
Now, Teresa, you've been in one of my classes. I shouldn't let you answer the question. All right. So I see a lot of people chiming in through the chat. There really is no right or wrong answer to this. I'm gonna just give you my answer. I do not believe when you buy your residence that that's an investment. Um, I understand that when you pay that mortgage, a part of that mortgage does go to interest and a part of that mortgage goes into equity and you can't have accrued equity in the house. I get all that. Yes, I understand you can take out a home equity line and do all these little fancy things with it. But at the end of the day, it's not an investment. It's your residence. You live there. When you think about real estate investing, if I own a 50-unit apartment complex, most likely I don't live there. I don't depend on that apartment complex for my residence. When we closed that Lowe's shopping center a couple of weeks ago, no one's living at the shopping center. It's not a residence. It's actually an asset. It's an investment. It produces a return, and it produces that return whether I go out and work for it or not. Now, if you think that your house can some kind of way produce a return without you going out and working for it, please show me that. Most likely, if you're not paying the mortgage, it's not going to be an investment for much longer. And most likely, you're actually working a job or running a business to be able to pay that mortgage. And this is a really important distinction. Also, I like to remind folks who do believe that their house is an investment, just keep in mind when you first purchase that house, who do you pay back first? I mean, when you're making that mortgage payment, almost
Interest.
99% of it is going to the mortgage company when you first start paying that mortgage back. Eventually, yes, eventually after you pay the mortgage down, you do start to accrue some equity in the house, but it is your residence. I don't necessarily consider it to be an investment. Now, you might be wondering why that's so important to me. It's important again because it's important that you have the right mindset. It all comes back to mindset. I know plenty of people that when they want to take that big vacation, they may take out money out of their house to be able to take that vacation. If they want to go buy that new car, they may take money out of their house to be able to go buy that new car. You you don't take an asset if you're an investor, you don't take an asset and turn around and use it for consumption. And that's why it's really important that you have the right mindset around what you're doing, because if you don't have the right mindset, it's going to be really difficult for you to get in this business and be successful. The last thing I'll share about the difference between an investor and a saver, it's also habits. Habits are really, really important. Habits are those actual behaviors that you take day in and day out. Sometimes almost subconsciously. Sometimes you're not even fully aware of some of the habits that you might have. But the investors that I know all have the right habits. They get up in the morning, you're educating yourself about what's going on in the market, in your community, in your backyard. Having the right knowledge is important as a strong investor. Who you surround yourself with is really, really important. I make sure that, throughout the week, I'm going out and having coffee and I'm having lunches with people that can connect me to opportunities. That's the habit of an investor. It's not necessarily the habit of a saver. So again, it comes back to mindset and it comes back to those actual habits that you're practicing day in and day out. So, all right. So let me move into this is one of the final points I'm going to make about what it takes to be a real estate investor. Um, you know, um, Dr. Tyson, I'll ask this question to you. If you and I got in a car together right now, today, we got off this webinar, we go jump in a car. and I say, "Hey, Dr. Tyson, let's make a drive out to LA." What would be the first thing you would do?
I'm gonna say, can I fly?
You don't want to drive.
No.
Let's assume I don't have any money for the tickets, Dr. Tyson. I'm an investor. I'm trying to not consume here. So we're gonna make the drive. What's that first thing you're gonna do when we sit down in the car? And Dr.
Um,
Tyson's not, Pastor Tyson ain't driving. It's gotta definitely be you.
know why we going out there?
So you want to know why we're going out there. Okay.
Uh-huh.
That you want to know why. That's important. Cheryl, if you and I was taking that trip together, what would be one of the first things you would do? We're in the car, we're getting ready to go. What are you gonna do?
Well, it's too late if you're already in the car. Got to make sure you can afford the trip and any incidentals.
So you got to make sure you can afford the trip. I heard
Yeah.
someone, and then I see in the chat somebody says, map the map. Hold on, let me pull the chat up. Map the route. Pack, get directions. Somebody says put your seatbelt on. That is important. Well, when you take all the various things that y'all just said, it all comes back to having a plan, right? I don't think you would take a trip with me to LA or any city. I don't think you'd go anywhere with me, Dr. Tyson, even if I said, hey, let's just go to Raleigh. If we didn't have a plan, you would want to know, why are we going there? How are we getting there? What time do we need to get there? What time do we need to get back? What do we need to pack? What do we need to wear? What are we going to be doing when we get there, right? So there would be all these questions that you would ask before you would ever agree to turn on the ignition and start driving. Now, I'm going to tell y'all, and some of y'all might be living like this on the webinar. Do you know how many people go through their day, go through their life, day in, day out, with no plan? They wake up in the morning, they don't know exactly what they're doing that day. They don't have a clear idea of what their goals might be. They may not even know, they may know what their goals are. They may know that they want to save money and be financially free and help their kids, but they've never stopped long enough to ask themselves, how am I going to get there? Like, how do I actually do it? What is the route that I'm going to take to be able to do this? And I'm absolutely telling everybody on this webinar, if you don't take anything away from this conversation today, but this one thing, I have been doing this for 21 years. And everyone that I have ever encountered that has done this successfully, they always had a clear, well-defined plan. Now, Cheryl, if you and I map out the trip to LA, once we get started driving, we might run into some roadblocks. We may get detoured to another city. We may have to take a highway that we didn't necessarily plan for. We might make some stops along the way. You're going to get hungry. I'm going to get hungry. We need to get gas. But having that roadmap, having that plan is what allows you to, even when you come up against obstacles or challenges or delays, you can always come back to that roadmap. You can come back to that plan and be able to have a successful trip. I always tell people, I mean, you're either you're gonna, I mean, if it you want to, and Cheryl, you're in business, so you understand this. Day in and day out, you want to be working that plan. So this morning, when I got up this morning and I started going through my routine, and I'm turning on CNBC, and I'm reading the articles that I read in the morning, and I'm taking in the information that I take in, or even being here for this webinar today, it was all a part of a plan, an actual roadmap on how I was going to get there. And that's a huge failure point that I see for so many people that express interest in learning about real estate, learning about investing. They never just sit down and say, okay, hey, what's my roadmap? Like, how do I get from where I am right now based on my education, my knowledge, what I know, what I don't know? How do I actually get to that end goal? Um, does anybody want to chime in and share with me there? I mean, how many times have you set out to do something and just realized that you just failed to plan properly? Cheryl, I know you've got some war stories, right? You're a business owner. How important is that plan for what you do day to day? I think you're on mute. There you go. No, you're on mute. I can't hear you. Now you're just there
Now
you are.
here I am.
Okay. There you are.
Obviously,
Okay.
obviously, I don't do a lot of Zoom calls.
It's all
So
good.
when I first opened my store, I kind of failed to plan. Um, but luckily enough, it worked out for me. We were able to expand into the neighboring suite very quickly. Um, and because we got really lucky and the business demand was there. Now we're having to pivot back, and now we're looking at downsizing our space here, where we're at now. But that's actually okay because we're looking to move our production facility to a commercial kitchen. Um, but because I didn't plan, there was a lot of things that didn't fall in place. Luckily, we had a safety net already in place to catch us. But if there hadn't been for that safety net, we wouldn't be in business anymore.
Yeah, I mean, and Cheryl, I mean, you and I, we could be on this webinar all day talking about the number of businesses and restaurants and
Yeah.
cafes and bakeries that so often they fail not because they don't have a great product, not because the location's not great. I mean, all the reasons that people make up and tell themselves why they failed. They failed because they didn't have a plan. They did not have a plan to work. And having a plan, whether you're starting a business, wanting to invest in real estate, wanting to develop real estate, or just whatever you're doing within your own professional and personal life, having that game plan is so important. I've gotten a little older, so I don't go out on New Year's Eve like everyone else does, but I sit at home, and you may find this funny, but I'd sit at home and I work on my life plan. I developed a life plan probably 15 years ago, and every New Year's Eve, I'd sit down and I review it and I update it and I try to figure out, am I on course? Am I doing the things that I really want to do? Sometimes you're doing things, man, you might be living a life and you're not necessarily living a bad life, but you may not be living the life that you want to live. You may not be living the life that you told yourself that you were going to live. You may just be living the life that you're living. But without that plan and having something to ground you and having something to come back to, a lot of times it's very difficult to understand if you're making progress or if you're just really sitting still, to be honest with you. I know so many people. My mom, she's a great example of this. My mom, she had a good job working for Hanes Brand. She enjoyed it. But she wasn't necessarily doing what she wanted to do. And she had been in this job for 20 something years. Can you imagine doing something that you don't even want to do and you do it for 20 something years? And there's so many people in this country and in this world that are living like that, simply because they don't have a plan to recenter themselves. Hey, Antoine, I saw you come on camera, man. Did you want to chime in on that real quick? There you are. You're off mute, yep. But I can't hear you though for some reason. But you're not muted. Technology. Yeah, I can't. Can you hear me? Okay. I can't hear you at all. No, I'm sorry. Does any We'll let Antoine see if he can figure out his technology challenge, but anybody else want to chime in on that at all? Or Cheryl, thank you for sharing that. I know sometimes it's difficult to share stories when you're not, they're not always great stories.
Yes.
Anyone else want to share with me? Would you like, we still have, a fair amount of time. Would you like for me to talk a little bit about some of the things that should be in that plan? Maybe give you some stuff to start thinking about once this webinar is over. Does that work?
Yes.
That's good. Okay. All right. Let me bring up some notes here. Let's talk a little bit about some things that if you are truly serious and ready to sort of get involved with real estate, whether that's investing, developing, or just finding a property for your business like Cheryl, here's some things that you might want to just start thinking about. Now, we talked about real estate being a good generator for passive income. We talked about that. But something I want to go back to on that, within real estate, you can actually be passive or you can actually be an active investor. Now, I want to talk a little bit about the difference between the two. They're both positions of being an investor, but you can be passive or you can be active. If you want to be an active investor, what you want to start focusing on is finding projects for you to develop, right? So you either want to be a developer, you want to go out and find land, and you want to build projects, or maybe you want to buy an apartment complex. I know my good friend William's on the call. That's one of his big goals is to get out and buy an apartment complex and operate it and run it and get the rents higher and do those kind of great things. Or you can also be passive. Now, as a passive investor, that would mean that maybe you're investing in real estate through something like a fund model, like the fund that I created last year. It means you're still invested in real estate, but you're not actively running those deals. And there's not a right way or wrong way to do it. It just depends on whatever your motivation is. So after this webinar and over the weekend, and you start thinking about some of the things that we talked about today, or maybe you'll go back and watch the recording. Start asking yourself, am I wanting to be an active or more of a passive investor? Now, um, you can get exposure to real estate through things like REITs. I'm sure someone like Charmin, who's a financial advisor, she would be very helpful for something like that. I do want to clarify that when you invest into a REIT, that is REIT, it means Real Estate Investment Trust. A REIT is a publicly traded stock. So you're not necessarily investing in the underlying real estate. You're actually putting money into a fund. Then that fund manager is actually going out and buying real estate and doing real estate deals with it. Typically, your returns on a REIT might be somewhere around 8 to 10%. So you're not going to get the same kind of returns in a REIT that you would get from owning direct real estate, like actually going out and doing deals on your own. You're always going to get a much higher return. But with that said, for some of you all that just want to get into real estate investing, maybe you're not ready to go all the way with being an active investor. Get in touch with someone like Charmin. I think REITs are great vehicles. I'm just trying to help you to understand the difference between what you can expect in terms of your returns. Um, you may also want to start thinking about there are a multitude different types of real estate. Okay. You have multifamily, which is very, very popular. Most times when you hear people talk about wanting to be a real estate investor, they automatically talk about apartments. That's a very, very popular asset class. But you also have retail, you have industrial, you have hospitality, you have office, even though right now office is not doing so great. We're all on this Zoom today and we're not sitting in a conference room in a physical space together. So that's one reason that office is sort of weak and the fundamentals have been weak since COVID hit. But it's still an asset class that you could take a hard look at. Most of my experience over the last 21 years has been in commercial real estate. So most of everything I've done has been multifamily, office, retail, industrial. And then I've also done a lot of what we call special use deals, which are like restaurants. I have done some residential. I think residential is a great place for you to get started. If you're just starting out, you have a limited amount of capital that you can get started with. Doing a residential deal is a great way to just start building more capital. And as you build more capital, you can transition into doing commercial real estate. So when you think about a residential deal, sometimes you can do a residential deal for no money. And before I explain that, maybe I'll let y'all chime in on that. Anybody have any ideas on how you could do a residential deal and not put any money in at all? Come on, William. I know you out there, man. Tell me how you can do a residential deal and you don't have to put any money in.
Um, yeah, well, I was, I, for me, I would say the best way, as far as like doing residential deals without putting your own money in, is basically just raising capital and like building relationships, and that you can leverage money as well too. So, I
That's
mean, that's
very
how
true.
right.
So that's very true. So a lot of what I actually do is leverage relationships to be able to go out and do real estate deals. And that's a great way for you to get in and get started. But also, many of you probably have heard of flipping houses. I know that's a big term. I even got a TV show out there about flipping homes. If you get into flipping homes, yes, you could. Oh, sorry, screen switched off. Um, I thought I lost all y'all on the Zoom. I was like, oh my gosh. But yes, you can get into. I saw somebody put in the chat. Some people call it wholesale flipping. So what you can do is you can identify a house, understand that you can essentially negotiate a contract with the owner of that house. So let's say, for example, you decide that you're going to buy the house for $150,000. Okay. You can then go find an investor who really wants to own the house long term. And then maybe you flip that house or you flip that contract to that investor for $160,000. So then you make a quick 10,000, but you never actually closed on the deal. You never actually bought it. So that's one way for you to get started and just generating a little bit of income if you're actually wanting to go all the way to doing commercial real estate. On average, if you're going to do a commercial deal, I tell people that you need to have somewhere around 20 to 30% of whatever that asset is. You need to have that in cash. Okay. So, a commercial deal, they're much larger deals. I mean, so on average, let's say you're doing a $500,000 deal, you're probably going to need somewhere around, 150,000 in cash. It doesn't have to be your cash, but you're going to need 150,000 in cash to be able to do that. Um, Cheryl, for someone like you who's actually thinking about buying real estate for your business, there's a multitude ways of doing that as well. You can use SBA financing. And a lot of times, if you use SBA financing, if you're doing business owned real estate, you can get a 90% loan to value. So maybe you only have to put 10% in instead of 25 to 30%. So that's another way to do those types of deals. Um, just sort of checking my notes here. And I mean, for some folks who get into investing, especially if you're starting in the residential space, you don't necessarily have to do flips. There's a lot of people that do what we call buy and hold. So they buy that property, they hold it long term, they go out and buy another one. I actually did a deal with a guy many years ago. He had 300 single family residential properties, 300 houses that he owned and managed. He had a whole crew that he had hired to basically take care of them all day long. What we ended up doing is we actually rolled all his houses into a portfolio. We sold all the houses and then actually found him an apartment complex that he could invest in because it was a lot easier to manage if you got 300 units in one space and not 300 houses scattered all over the city. But he'd been doing that for years. He just, every time he got an opportunity, he'd buy a house, he would hold it. So that's another great way to start building a real estate portfolio for yourself as well. A couple other things here. One other thing about real estate that I absolutely love, it is what we call a commodity. So, in other words, at least the last time I checked, God's not producing any more land, right? So there is a finite supply of land and property that's available in the world. So it is a commodity. But what I love about this commodity is that it also it when you invest in stocks, oftentimes when you invest in stocks, you're either buying that stock for cash flow, like maybe that company pays a dividend, or you're investing in a company that maybe doesn't pay a dividend, but you're buying that stock for appreciation, okay? Because you think the valuation of that company is going to grow over time. The cool thing about real estate is you can actually get both in the same asset. So real estate has the ability to produce cash, the passive income that we talked about before, but real estate also appreciates in value over time because it is a commodity. And so as an asset, it can actually provide the best of both worlds, in my opinion. I oftentimes get asked, do I invest in stocks? Sharman, don't get mad at me. Don't be upset. I don't do a lot of stock investing. I'm not a Wall Street guy. I do keep up with what's going on in the market just simply so that I can be informed about what's happening in the economy and the financial world. But I'm not a stock guy. And I don't have anything against people that like stocks. But I just personally enjoy the idea of having something that has real, true physical intrinsic value. Stocks can be easily manipulated. It's basically a lot of ones and zeros inside of a computer. Certain emotion can cause a stock to go up, and all of a sudden, that's the opposite emotion will cause that stock to go down. May not have anything to do with the company or the fundamentals of the company. It just may be certain emotion a lot of time is moving markets. Well, when you own a 200 unit apartment complex at the corner of Main and Main, there is no emotion that can sway the value of that asset. It has solid physical intrinsic value. And that's what I love about it. Like if you put your money in a house, you're going to be able to ride down that street and see your investment. It's right there. If I decide to buy 1,000 shares of Google, I could show up at the company, but they probably tell me to leave. I mean, they're not going to let me see the books, right, Charmin? I mean, they're not going to show me anything, okay? But when you buy real estate, it's
True.
physical, it's real, it's intrinsic, it's a hard asset, and that also makes devalue. I mean, the devaluation that makes it a lot harder because it is a physical asset.
Yeah.
And then, Charmin, did you want to chime in? Go right ahead.
Well, I was just going to say, I love real estate too, and I love stocks for two different reasons. The real estate piece to me, and I would have to disagree about your house, sometimes can be an investment just because of what you just said. You can have appreciation in your real estate and it happen to be your primary residence too. But we can agree to disagree on that. But stocks to me, it allows you to be an owner rather than a consumer. It goes back to what you were talking about before. So I know this isn't a stock class, but yeah, I definitely can see people owning both asset classes and doing very well and building their wealth with both.
And I agree, Charmin, and I'm glad you said that at the end because I do want people, especially for some of y'all that are on the webinar that are thinking, starting to think about what it would look like for you to plan your financial future, and be able to set up an investment plan that's going to be able to benefit you and your family. I think what Charmin's talking about that's important is you do want to have asset diversification, right? So I would never tell someone to go put 100% of all their eggs in any asset class, you know, whether it be real estate, stocks, bonds, whatever. You do want to have a healthy portfolio. I mean, so yes, in every portfolio, there is some place where you could put stocks and bonds and other types of commodities like currency. I know Bitcoin is something that's very popular amongst people right now. So you do want to build a balanced portfolio, but I'm just a huge proponent. So oftentimes, I see people put together an investment portfolio, but they don't have any real estate in there. And I think real estate is just absolutely critical. It can be a really great anchor, and good grounding for your portfolio. And then the last thing I'll mention before I really, and we've been on the webinar now for about an hour. I blocked out an hour and a half, so I'm willing to hang out and ask questions, answer questions, whatever y'all want to do. But the last thing I'll mention about just, why you want to take a hard look at real estate is just some of the tax advantages. So there's something in our country that we call a 1031 exchange. Some of you may know about this, some of you may not. So a 1031 exchange is a tax code. It essentially means that if you own a piece of real estate and you sell that real estate, if you will put the proceeds from that sale back into real estate, you don't have to pay taxes on the gains. Now, that's a very significant thing. I'm going to say that again, just in case you missed it. If you own a piece of real estate, an investment property, you decide to sell it, you make $50,000, $100,000, you make $1 million. I got a guy I'm working with right now. He's owned an apartment complex for about 20 years. We're working on getting that sold and then putting him in something different. He's probably going to make about $1 million on this deal. I mean, he's owned that property for so long. So what we're going to do is a 1031 exchange. We're going to take the proceeds from that sale. We're going to put it in a new property. We have about 6 months to be able to complete that process. And as long as he does it within that time frame, he won't pay any taxes on the gains. So that can be a really, really powerful way to build wealth for yourself. I mean, even if you're buying real estate, selling real estate, as long as you keep rolling those proceeds into a new deal, you're not paying any taxes on those gains. That is not a benefit that you would have if you were in any other asset class. I mean, if you were in stocks or commodities, any other place, you will pay a capital gains tax when you sell those stocks or when you sell those bonds. I mean, now you can do little things to minimize it and all those kind of things, and you can get a really smart accountant to help you with that. But I don't know another asset class like real estate where you can literally sell the asset. As long as you identify a new property, you don't pay taxes on those profits whatsoever. So that's a very, very important incentive to be able to get in the real estate business. And there's some other incentives out there, like opportunity zones. I get questions about opportunity zones a lot. Basically, with an opportunity zone, if you're developing or buying real estate in a certain area that the government has deemed to need investment or be void of investment, as long as you're investing in those areas, you don't have to pay taxes on your capital gains for an extended period of time. And you can go online and those opportunity zones and the maps of where those areas are, they're all online. There's some other little tax credit stuff you can use for real estate too that I can certainly hit on if you want to know more about, like new market tax credits, historic tax credits, mill tax credits, renewable energy tax credits. I mean, there's a whole menu of tax credits that are out there that you can also utilize for buying and developing commercial real estate. Even low income housing tax credits if you want to get into doing affordable housing. Those types of programs exist. So I've said a lot in 60 minutes. I've been doing this long enough to know that I could talk about it all day, and I still might not actually say what you want me to say, or I may not hit on something that you really wanted me to hit on. So I really want to turn this over to y'all. And if you want to ask questions, I would love to keep going. I've got plenty of time. If you don't want to come on camera, if you don't want to come off mute, you can also drop a question in the chat. And I'm looking at that now, and we'll try to answer whatever you ask me. See somebody in the chat say economics is the study of how we make decisions. It is emotional. Yes. See Trajan talking about sweat equity. That is a great way to be able to get into doing real estate. Sweat equity, for those of you that may not know what that is, that's basically you're trading your talent or your time, or you're working on that project in some kind of way, and that earns you equity in the actual project. That's that really the way I got started in real estate, was from doing a lot of sweat equity.
Algenon, could you touch on low-income housing tax credits? I know the city of Winston-Salem right now has a RFP, I guess, request from the community. If you want to be a real estate investor, they're willing to sell land for $1, but you have to have an affordable housing project to go on that land in order to get it for $1, and then, be able to build or develop it. But there's a piece of that needs to come from is it called LIHTC, low income housing tax credit? But there's like a application process. It can be pretty lengthy. So there's deadlines for everything. And the city has a 30-day deadline to apply for this funding to help real estate investors with the projects they want to do. But then I heard the LIHTC funding may come later in the year. So can you explain any of that, how that might work and coincide?
I can. So what Sharman is alluding to, these types of programs have been popping up all over the country. I would say almost every major city or community in America right now is basically struggling with an affordable housing problem. I mean, in some communities, it's much worse off than what it is in Winston. I would say in North Carolina, we have seen house prices have went up significantly, but certainly haven't went up at the same pace and the same rate that you might see in a Texas, Florida, California, New York. So a lot of communities are trying to figure out how do they expand their affordable housing so that people don't end up homeless. And there's been a lot of different programs that they've initiated. Some you may even heard of what they call an ADU, so basically an assistant dwelling unit. They now allow you to build those on your property here in Winston-Salem so that you can rent those out. And yeah, you can make money from it, but from the city's perspective, they're wanting you to do that to create more affordable housing. Now, the program Sharman is talking about, the city has been running this program now for a little while. They will sell you city-owned land for $1, and you just have to agree to put affordable housing on that site, okay? And affordable housing, they have some technical definition for how they measure affordable housing. I can't remember the percentage right off the top of my head, but I think it's like 80%. You have to be making 80% or less of the AMI, adjusted median income, or something like that.
That's
So,
right.
so I got it right. Good. All right. It's been a while since I looked at that code, but yeah, if you agree to do that, you can essentially buy that piece of real estate from the city for $1. Now, the state of North Carolina has what they call the North Carolina Housing Finance Agency. Okay, and that's based out of Raleigh. They issue low-income housing tax credits, or what we call a LIHTC. You then can use those credits to basically offset the capital that you need in a project. Now, as Sharman alluded to, that process is very lengthy. It is somewhat convoluted. They basically take applications for those LIHTC for those credits once a year. I think the application process, I think the deadline for that is like in the fall, somewhere around September, October every year. And then they normally announce the reward, or whoever's going to get awarded credits, they'll announce that in the spring and the summer. Typically, they don't choose multiple projects per county because there's 100 counties in North Carolina. They always want to sort of spread the money around. So it's a very competitive program. I do some work for two different groups. There's a group called Winfield Properties, and there's a group out of Greensboro called Beacon Property Management. Both those groups almost exclusively do affordable housing through that LIHTC program. So when you apply for those credits, you're competing against people that do a lot of it. And so it can be a very, very competitive process. What I've been encouraging the city to do, Sharman, and they've not done this yet, but I hope they will. I've been encouraging the city to issue a very large housing bond. I'm talking $25-50 million housing bond. And we essentially start using money from that housing bond to offset some of these projects versus having to send developers and investors through the LIHTC program, because I just think the LIHTC program isn't as effective as it needs to be. But the city hasn't found the will quite yet to do a large housing bond, but I think that would make a huge difference, Sharman. All right, so I see a couple questions popping up here in the chat. You said, is there a website that have all the tax breaks you just mentioned? No, there's not. Of course, they're going to make it hard for you. I mean, if it was easy, everybody would be doing this. But I'll give you a couple of different terms that you can Google, and you will find some information on it. So, a couple of programs that you want to take a look at is the historic tax credit. Now, the feds and the state both offer historic tax credit. You can layer them and use them on top of each other, but you can Google historic tax credits. I would Google new market tax credits. New market tax credits is a program a lot of people don't often look into, but it's very powerful as well. I would also take a look at the low-income housing tax credit program I just mentioned. If you want, you can go to the North Carolina Housing Finance Agency, and there'll be a ton of information there about the LIHTC program. And then there's also like a slew of other smaller tax credit programs. So you have like the renewable energy tax credit program. So in other words, if you're going to buy an office building or a shopping center and you want to make it more energy efficient, you can actually get tax credits for that. If you were to buy like an old warehouse or an old mill and turn it into something, an event center or whatever you want it to be, you can actually get mill tax credits for that. That's something that's available here in North Carolina. So those are just a few of the programs that you can go take a look at if you like. Okay, I see another question here. It says, this is from Antoine. I'm having trouble with my audio. You mentioned the fund you've started and your partnership with Bloomfield Capital. What's the ideal deal size and type you're potentially looking to fund? So, Antoine, right now we're focused in what we call the small to middle market. So everything that we're looking at is probably 1 to 50 million. I would say that our sweet spot where I'm like really, really good is sort of what I call the small to almost middle market. So like I'm really, really competitive in the 1 to 15, 1 to 20 million space. When you start getting outside of 20 million, I mean, you get a lot of other bigger investment groups that are looking at those kind of transactions. So that 20 to 50 million space is very, very competitive. It's not to say that Bloomfield and I can't do deals in that space, but I always like to say that, our sweet spot where we're going to be the most competitive is in that 1 to 15, 1 to 20 million. The shopping center that we closed in Hickory, I think it was like 12 or 13 million. Only two of the deals that we did last year were really, really large. The apartment complex in Virginia and the apartment complex in South Carolina, both of those were like right around 40 million. So they were big deals, and then the other two deals were much smaller. Thank you for that question. And any of you all that are starting to look at buying real estate, obviously I would love to talk to you about how to structure your financing, and certainly can help you with that. April, go right ahead.
Hi. So I wanted to know what would you think about, what would you say to someone who is, well, I'm interested in kind of downtown development in smaller towns, these little bedroom communities that are popping up because now metropolitan areas are growing. So I see that's a great opportunity. I just love downtowns anyway. And so to revitalize those areas, I've been to one incremental development alliance workshop, which helps kind of teach people those kinds of things right before COVID. But what has been your experience in helping people find financing to help kind of redevelop units downtown so that people can build move in businesses in them?
April, I love it, and thank you for the question, and also thank you for your interest in doing some what we would call urban development or infill development. I think infill urban development is so important. I mean, it's critical. I mean, if you look at over the years, our cities, whether it's small communities or even larger cities, they've naturally expanded out, right? Like we've grown them out by taking more and more land. What we're starting to find, especially in areas like Forsyth County, is that we don't really have large tracts of land left out in these suburban areas because we've used a lot of it up. So as we continue to grow as a city and a community, if we want to do it in a smart way, we're going to have to do urban development or infill development like you're describing. And I think some of the smaller communities are perfect for it. So I've got a project that I'm doing right now in Lexington. I'm working with Michael Tesh in Lexington, Uptown Lexington, to do a food hall there. Michael has already been pretty busy in that area. He's done a distillery. He just opened an event center where we hosted our Christmas showcase a few weeks ago. I'm partnering with him on a project. I've got another one of my other investors. He also is doing 100 multifamily units in that Lexington area. I'm not involved in that project, but I consulted on it a few years ago when they first started looking at it. So like little communities like Lexington, I love. I have been trying to do some things in Asheboro. I have bidded on a couple things, but we have not been successful there yet. But I think Asheboro is a really up and coming small community. Many years ago, I tried to do some things out in Kinston, North Carolina, Eastern North Carolina. I love Kinston. At the time, they had a new restaurant that opened called Chef and the Farmer that was really, really popular, and people were traveling there. But I think, the challenge that you're going to have working in smaller communities will always be your financing. Okay. So when you look at North Carolina, we have what we call primary markets. Primary markets are going to be Charlotte, Raleigh, Greensboro, Winston, High Point, Asheville, Wilmington, right? There's only a handful of what we call primary markets in North Carolina. The lenders and the investors are always mostly interested in primary markets, okay? When you start looking at small communities like Lexington, Asheboro, Kinston, Kernersville, Clemens, Louisville, those are all what we call secondary and tertiary markets. And it's much harder sometimes to attract capital in those areas. So that is the one challenge you'll have if you want to work in a small market, is just probably finding the capital to do what you want to do. Outside of that, I have found that working in these small communities, they love working with people that come to town and want to make an investment. So in terms of like permitting and inspections and all the things that you typically get involved with a community or city, a lot of those things are much easier to deal with. I mean, the site that I won in Lexington for the food hall, um, I mean, I only went to one meeting with the town, and I mean, we won the site. Well, that wouldn't happen in Winston. You know, I would have to go to a dozen meetings to be able to convince the community for us to win the site. So it's just a little bit different. I mean, you can do things a bit faster in a small community, but again, April, I would say if that's what you're leaning towards, just know that financing is probably going to be where you have to expend a lot of brain power to make sure you get that right.
So that's a good point. I think that's fair considering that you won't have the patronage that you would have in a bigger city. Um, but I'm wondering from your experience, would financial organizations look at, like, so a city I'm looking at now, they just got all this Main Street money. The downtown looks great. Um, and it's very hallmarkish. It's very cutesy now, you know.
What's the name of the community?
Goldsboro. It's
Oh
a
yeah,
smaller
yeah.
city.
I like Goldsboro. Yeah. I used to sell insurance back in the day, and I sold insurance door to door. So I've been to like every small community in North Carolina.
They have won planning awards for their downtown development and things, but there's still more to go. And right now, the little bars are suffering because they don't get enough customer service. There's only one place that has a good brunch, you know, because other people, they can't keep up with brunch. There are not enough people coming down, but that's because there's not enough entertainment. There's not enough to attract. And so that's what they're missing. And so there isn't enough fun things like a music hall. You talked about the food hall, a music hall. In Asheville, they created a music hall and there are events every night, you know, things like that. So I don't know. I just, it's just missing that little piece, but they have a great downtown plan, development plan. I just wonder if some of that comes into place when looking for financing.
Yeah, I mean everything you said. I mean, if I'm underwriting a loan for you, everything you just said would play into how I'm looking at that market and that community, and whether or not the plan and the project that you're wanting to do, will you be able to repay the loan, right? Like ultimately, that's the only thing the lender really cares about. I'm gonna share a couple more things with you. Well, let me ask this question first. Are you from Goldsboro?
Yes.
You are. Okay, so I figured that. So a lot of times when people ask me about developing in small communities, it's probably because they're from that community. And so there's a certain amount of passion that that person will have for the city or the community. You'll probably know way more about it than me or anybody else on this webinar. So that plays into it as well, April. Like your passion, your background knowledge, the context you have about the community, the growth that the community has experienced, all that plays into how you're going to sell that project to a lender. So that's good.
Mhm.
I mean, normally so like even the project I'm doing in Lexington, I'm not from Lexington, but there's been a bunch of projects that have happened already, and that's what attracted me, right? Most times
Mhm.
you don't get someone coming in into a small community from the outside wanting to redevelop their downtown. It's probably going to
Right.
be someone that lived there or grew up there or knows something about the area. So that's great. Now, with that said, there are some lending sources that you can look at. SBA, which is obviously through the federal government, they lend in every community across the country. They love small communities. In fact, the SBA prefers small communities over large communities because they have a mandate to try to create revitalization in rural communities. Okay.
Mhm.
So that's a great program to use. A lot of people, what I'm getting ready to share with y'all now, this is going to be news for everybody because a lot of people don't know this. The USDA actually has a lending program. Probably didn't know that. The United States Department of
Oh.
Agriculture makes loans. Guess where they like to make loans at, April? Small towns. They prefer, in fact, the way their lending guidelines work, they won't make a loan in Winston, Greensboro, Charlotte, but they will make a loan in Kernersville, Goldsboro, and Kinston. Okay.
Mhm.
So a lot of people don't even know that the USDA has have that kind of financing available. And then the last program I would look at a federal level would be the FHA. So that's the Federal Housing Administration. Through their FHA loan program, again, they like lending in small communities and small towns. Now, with all that said, April, those programs can be a little bit more, it's more of a process to go through, right? So if you went to Truist and you asked for a loan, they're going to process that request in about 60 to 90 days. If you go to the USDA or FHA or SBA, they're going to process that request in about 4 to 6 months. Okay, so it's going to take longer. You just have to be prepared for that. But they would absolutely those types of programs would love to make an investment in a community like Goldsboro. And I'll make sure I'm gonna drop some information in the chat for everybody. But April, if you have more questions about it as you get more into it, I'd love to be a resource for you. I see a question. What is the USDA loan program called? It's literally called the USDA loan program. I mean, if you could literally go to the USDA's website, and I think they've got some parameters around how it works. And unlike like with the SBA is not actually making you the loan. So, like Cheryl, for example, if you wanted to use an SBA loan to buy a piece of property for your business, the SBA isn't making you the loan. Someone like me might be originating the loan, and then they're coming in and funding the loan. So you're actually going through a private individual or a private company or a private bank to get the loan, and then the SBA comes in on the back end. With the USDA, they actually are making the loan. So that money is actually coming through the USDA. And I see here, is there any grants that could be used to help with secondary or tertiary capital? And I live in a small town called Madison. Yeah, everything I just shared with April is perfect for that question as well. I'm very familiar with Madison, North Carolina. I think up there heading back to Virginia. All right, so let's see here. It's 1:25. Maybe I can take one more question before I let y'all get back to y'all real lives and responsibilities and jobs. Sharman, I see you got to leave. Real quick before you
I do
go,
have a question. Oh,
yeah, I'll take your question, Rashad. Real quick, Sharman, before you leave, just so you'll know what's next. You heard me talk a lot about desire, will, mindset. Those are important things that you got to have to get into this space. You heard me talk about habits, and you heard me talk a lot about planning. So the reason I oftentimes see people fail at this is because they either don't come up with the plan or they don't know how to come up with the plan. And that's where I come in. And I would love to help anyone on this call or webinar to be able to start developing the right habits and developing the right game plan for you to really start doing what you want to do, whether that's investing for your own personal financial freedom, or maybe you want to find a property because you're expanding your business. But I absolutely would love to work with you. And there's a couple of ways that there's a couple opportunities I've created that you can plug in if you're ready. Actually, next Friday, I'm going to have a longer intro real estate class. It's going to be a half day. It's in person. So it's not Zoom. I love in person because I get to interact with you a lot more. So that's actually going to be next Friday. That class does come with a cost. The cost for that class is $199. However, because you've been on this webinar with me today, I'm actually going to give everybody a discount if you want to join me next Friday. So if you'll sign up for that class, Sharman, if you're interested, if you'll sign up for that class in the next 24 hours, you can buy that class for $99. And I'll make sure I send out a link to everybody so you can take advantage of that. Again, I stress that it's a more advanced class, Sharman, than obviously what we've talked about in the last hour, but it does just sort of start helping you to create that initial game plan, that foundation.
Oh,
Now,
that's
if
great.
you want to go even beyond that, starting on the 17th, which is next 2 Fridays out, I will start a 12-week course. We will be meeting, we'll have a class every week on Friday. It will be virtual, and it's 12 weeks. And that 12 weeks, we will get into a lot of the nitty gritty around how do you really buy, invest, or develop commercial real estate. Over that 12 weeks, you will write your plan. I mean, you will basically write a very detailed plan that you'll be able to use coming out of that class to be able to go out and start executing on whatever your goals and your desires are. I think I am trying to limit that class because obviously if I've got a manageable number, I can interact a lot better. I think we've had maybe 8 or 9 people sign up for that class already. I know Teresa, who's on the webinar today, she signed up for it. I think William's also coming to that discussion. But that will kick off January 17th on that Friday, and it'll go every Friday for 12 weeks. And it's an hour and a half every Friday. It's through Zoom. The Zoom discussions will be recorded. I don't want anybody to miss class, but if you have to miss class, it will be recorded so you can go back and watch it. And then, of course, I'll be sort of mentoring and coaching you through that 12-week process as well. So, I mean, you get a lot of value out of it. The cost for that class is 1,200, so it's $100 a week, basically, is what it works out to. I see someone asking me what time. If you're asking me about the 12-week course, we meet every week on Friday at noon. So it's like 12 to 1:30. It's 90 minutes. Um, if you're talking about the in-person class, which is next Friday, we will actually meet at 9 a.m. and we get out of class at about 3 o'clock. I know William came to that class last year and Teresa did as well. So I thought we had a great conversation. Yeah, William, send me an email later if you want to know more about the class. And Sharman, I know you had to jump. I just wanted to work that in before you had to go. And
Thank
then I think
you.
you're welcome. And then I think Rashad, you had one last question before we adjourn. Was that you, Rashad, or someone different? Or I can take one more question.
I'll speak with you
Yeah, that was me.
offline, Algenon. I'm
That's
sorry.
perfect. Go
Thank
ahead,
you.
No, no,
Rashad.
I was just you kind of just answered everything that I had a question about because I was just trying to figure out. My question was if you're just starting out and you wanted to get some information, you wanted today start and say, you know what, Algernon, this is where I want to be. This is what I want. I want to get started in real estate. Where do I start? What's the first thing that I need to do in order to get started? And I was just, wanting to kind of simplify and find out what it is that anybody would need to do. Because again, the information that you're giving, I would love to pass it along to somebody else. And if they just have that basic question, what is it that they will have to do just to get started and how to go about that?
Well, guess what? The moment you decided to log in with me today at 12 noon, you did the first thing that you're supposed to do. I mean, you took a step, right, in the right
Gotcha.
direction to try to get the information and the knowledge that you needed. So you've already done the first thing. I think now for you and anyone else that's still listening, I think you have to decide or determine what do you want to do next and what path do you want to be on and how quickly do you want to move along that path, right? Um,
Gotcha.
Everything that I've shared with you in the last hour, hour and a half, Rashad, you could go spend a whole day at Barnes and Nobles and be able to find out everything I just shared with you. You could spend a whole day on Google or Chat GPT or whatever your favorite tool is. I think the only thing that I'm really offering you and everyone else that's on the webinar is, again, I've said it countless times. I've been doing this for 21 years. So I think if you're ready, if you're at that point where you're ready to receive a true education around it because you really want to get started, I think I can help you do that faster. I can accelerate that process for you. Again, I'm not going to share anything with you or teach you anything that, quite frankly, you can't go out and learn on your own. You can learn it on your own. It's just the fact that having an expert and somebody who's been doing it for 21 years, guiding you along the way and coaching you, answering questions when you need questions answered, that's essentially what I'm offering. And if you're sort of
Gotcha.
ready for that, that's what this is. And you probably heard me say it about 6 times just now. If you're ready, because unlike, sometimes you go to a webinar like this and people are trying to tell you that you are ready, like just sign up, come on to the next class. That is not what I'm telling anyone on in this webinar. You have to make that decision that you're ready. And if you are wanting to come to the next step with me, I want you to be ready. I want you to have the right mindset because I want to help you get to your goals this year. I really don't want people to just come sit in class just because they want to, just hear more information, but not do anything with it. So I'm really, really looking for those people that feel like, hey, this is the year. I'm ready to take the step. I want to get started. I need that plan and that roadmap to get started. And I'm happy to help you to develop whatever that plan is.
Thank you, thank you. I appreciate it definitely, and I'll definitely, like I said, if anybody's interested outside of myself, I want to be able to come, direct them to you and the things that you're doing and your classes and things of that nature. So yeah, I just wanted to kind of get that information or get that point of view.
Awesome. All right. I see another question from, I think, a Mr. Tan. Um, I'm gonna try to answer this really quick because I know people are starting to pop off here. It says I have a few residential rentals. I want to add more. I just learned of DSCR loans. Is this a good option, or am I missing something that might cause issues? And do you know of someone that I should reach out to and learn? Yeah, let's you and I talk. I mean, that's the type of thing, Mr. Chan, I can help you with. I'm getting ready to I'm gonna drop my information in the chat, my cell phone number and email, so anyone can grab that. And then I'm also, as long as you registered through our constant contact system, I should have your email address. And I'm gonna send out a link to this conversation to your email. You should be able to get that. But Mr. Chan, I'm gonna put my phone number in here, and when we get off this Zoom, give me a ring and let's talk through your question. I can answer it a lot better. Would before anybody leave, would y'all like any more information about the next classes, or can I answer any other questions before we adjourn today? I hope everyone had a great time with me.
Yes, that just quickly, you said the next class was in person?
The next one, if you wanted to come next week, next Friday, that is in person. That's a half day class. It's basically just a little bit more advanced than what we did today. It's from 9 to 3 at Winston Starts in downtown Winston. And if you want to register for that, I can get you a link. If you do register in the next 24 hours, like I said, it's $99.
Yeah, I
The
didn't get that link, so that'd be great. I don't think I did.
Okay, I'll make sure. Did you register through Constant Contact, April?
No, I just did it on Facebook.
Okay. Will you do me a favor and drop your email in the chat? That way I'll have it. And anyone that didn't register through Constant Contact, if you can drop your email in the chat, then I'll make sure I've got it. And then I was just going to say, April, the 12-week course, that is not in person, that's virtual. That starts on January 17th, and it's 12 weeks, every Friday for 12 weeks.
Okay. All right. Thank you.
Awesome. All right, I see some people sharing their information. I'll make sure I add that to the follow-up list when all this is over. I'll send you out a recording of this if you want to come back and watch anything. And then any of you, I did drop my cell phone number and my email in the chat. And I think somebody said I'm missing a digit. Hold on. Here we go. If any of y'all want to reach out just for like a one-on-one conversation, I'd be happy to talk with you. Thank y'all for making time for this today. This is a really great conversation, and I'm trusting and hoping that you got some value out of it.